Hi there, thanks for tuning in to Bloomberg Quint. I'm Neeraj Shah, with me, my colleague Navneet Saluja, and we're trying to get you reactions and expert opinion on what should the markets make of what has arguably turned out to be a standoff of sorts between North Korea and USA. It seemed like restricted to just a nuke test. I'm using the term just a nuke test because the markets didn't react too much to it. But post about 9:30 or 10 a.m. India time, there have been a slew of developments, including comments coming in from South Korea that they believe that North Korea is preparing for an ICBM, which is the Intercontinental Ballistic Missile launch. How will this take shape? Will the markets be too worried about it or no? That remains to be seen. Just a quick brief here of what the markets are doing. This is a picture of what's really happening across the world right now, different asset classes too. So the markets, the equity markets have all corrected. Singapore FTSE is down, the Asian markets were down. If you look at what the world index futures have done right now on this screen as well, almost all the key futures are trading in the red. But Navneet, the key is none of them are trading with a red which is as deep that it should worry the markets.
That's right, Neeraj. In fact, just going back to Indian markets, morning, we didn't see that much of losses coming about, but the India VIX was actually telling you that there could be, near-term volatility because we started off with 8% gains, and intraday, India VIX nearly touched about 18%. But as you rightly mentioned, the losses so far have been capped, but the point here remains whether at these dips, because these opportunities are not there, we've seen the equity markets performing that well. Let's see whether this dip can get bought into or not, or whether this problem will be exaggerated going ahead.
Yeah, let's ask that question to Richard Harris. He's the CEO of Port Shelter Advisors, joins us right now on the show as well. Richard, good having you. Thanks much for taking the time out and being with us. Your thoughts? In the morning, we were speaking to Adrian Mowat of JP Morgan. We spoke to Hans Gotti as well. And both of them seem to believe that people are a lot more sanguine about this. This is not something that will worry the markets too much unless it reaches a stage of an armed conflict. What are your thoughts?
Well, I think people are sanguine because, we've seen this show before. It's getting slightly worse, step by step. It's a little bit like the frog being boiled in the water. As the temperature rises, the frog doesn't realize and doesn't jump out of the water until it's boiled. We may be in that situation, and we may well be in that situation, because we've had some of the first worries about missiles and missiles reaching Guam. They were the first shocks. After that, the market kind of discounts those shocks and maybe looks at them a little bit more rationally, or maybe a little bit more with a little more sanguinity. So I think what's happening at the moment is the markets are off a little bit. They're recognizing the fact that a hydrogen test is quite a severe thing. They're recognizing the fact that the rhetoric from North Korea is being stepped up. We're now talking about ICBMs, intercontinental ballistic missiles. Whether they can do that or not is another matter. So I think the bottom line is the market is being cautious. It's keeping an eye on it, but it's seen a lot of this show before, and it's not going to get too worried.
Richard, let's remain sanguine here and hope that there is no war. But in light of these events, do you see any sanctions coming from China?
Well, let's face it, China put on some sanctions, 2-3 weeks ago, much stronger than before. And the North has not only have they done nothing, but they've also ratcheted up not only rhetoric, but also actions. They fired a missile over Japanese airspace, which is rather rude. And they've also set off, a very large nuclear device. Now, all of those things are basically saying to China, get lost, we don't really care. So it's quite interesting. The key to this whole matter, of course, is China. China has to make some very, very difficult decisions. They don't want regime change. That would work completely against their policies and everything they want. But they have a regime that's acting in a rogue manner. They cannot now control it. So they've got some very big decisions to make.
They do. Richard, so pray tell me, if indeed this does not reach an armed conflict between the US and North Korea, but North Korea does go out and test a missile, whether it falls over an ocean or it crosses one of the other countries, we don't know all of that. But if indeed a step like that is also taken after yesterday's nuke test, do you think this will reach proportions which are more serious than what have been in the recent past? and should that worry the markets?
Well, you know, the issue has been that until fairly recently, North Korea launch vehicles certainly couldn't reach continental United States, were unlikely to reach Guam, and the only place they could really hit was Japan. Now we're in a situation where it does look as if their launch vehicles have a longer range and have a more serious range, certainly not to the continental United States, but maybe to other US possessions or maybe to other nations nearby. So it is getting more serious. And I think what we have to realize is North Korea one day will have a launch vehicle that can reach the United States, will have a device that they can put on it. And I think you have to throw normal caution to the winds and say this is a man who it's quite feasible he might launch a attack without any form of warning. Because maybe he really does think he can beat America in this way. And that's where it starts to get really serious.
Richard, because of these geopolitical tensions, do you think emerging market basket, which so far this year has been outperforming, there could be some sort of shift in the fund flows from emerging markets to developed markets?
Well, emerging markets are always volatile. This is the stage of the cycle, the later stage of the cycle where EMs tend to do quite well, and where money tends to flow in. You know, it does tend to be more of a risk-off. A risk-on element of the market, and I think that that's likely to continue, you know, provided we don't have any major setbacks. I have actually been looking at if you like, a pullback in the bull market sometime in the third quarter, whether it's North Korea that is the trigger factor, whether it's further debt concerns a trigger factor, but I have been looking at a pullback. So I wouldn't be surprised to see one, but I don't think that this is the big one. I don't think we're near global financial crisis stage yet. So I think the markets will eventually recover and move on. But the chances of a pullback is likely. If that happens, the EMs will pull back as well. But I think fundamentally we're still in an equity bull run that at the moment doesn't really seem to want to slow down.
Okay, I just want to mark a couple of things here. One is this is a nifty chart, and if you just look at what the index has done today, now back above 9,900. But you did see this bit of a fall that came in line with what happened to a lot of other Asian countries as well, or Asian markets as well today, when those first comments about South Korea's views on North Korea's missile launch preparation plans came about. So a bit of a correction that came in, a bit of stability right now, but still around 9,900. And this is the picture. The number of red on the screen is much, much higher than green. Just a few stocks in the green, more stocks in the red. The advanced decline ratio not that great as well. And before we get Navneet to tell us about how the FNO picture is looking like, one final question to Richard Harris. And Richard, I don't know how closely you look at India, but if indeed there is a bit of a risk-off element, and I tell you what, India has seen outflows from FIIs in the month of August in a big way, almost $1.5 billion withdrawn, but still the Indian markets haven't corrected because the domestic gush of liquidity is fairly strong. I don't know how closely you track India again, but if you do, and if indeed there's a bit of a risk-off from EMs by and large, what's the extent of correction do you foresee into EMs and into India?
Well, I think I think that there's always likely to be ebbs and flows as they move on. To my mind, EMs look quite positive still. And I think at this stage of the cycle, EMs will continue to move on. Very often they're sometimes the last ones to crack when the signals have already been seen in Western markets. So I think that's positive. Also, I wouldn't be too concerned about, 1 month's flows. Maybe you're looking 3 or 4 months, that might be more serious. But you can be sure the hot money is the international money. And if it looks like the domestic investors are buying their own market, it's probably going to be quite a strong global EM investor who will not feel that they have to come in as well. So I think it's too early to really look at 1 month, maybe 6 weeks as an indicator there.
Richard, since you're bullish on the emerging market space, which are the countries in this basket that you would be betting on?
Well, I think the old idea of the BRICS is largely dead now, and that's partly because you basically have oil producers within that, and you have oil consumers. And I think the oil price dividend, pretty well a 50% fall in the oil price. I think that's still coming through. Negative for oil producers, positive for oil users. Of course, China, India, oil users, Brazil, Russia, oil exporters. So I think that whole split has now finished. It was nice while it lasted, but you couldn't group those two together. So I'm still favoring more industrial economies, economies that do use oil. Those consumptions are getting less, things are getting more efficient. And I think that that's a long-term trend, that's a theme that's worth looking at.
Well, Richard, good having you. Thanks so much for taking the time out and joining us on Bloomberg Quint right here in India. Okay, that's the view from Richard Harris. And in line, Navneet, with what almost all of the other guests had spoken about today. Not really believing that this will result in a full-blown arms conflict, and maybe that's why the markets are not too perturbed about this. What is the FNO picture indicating though today? You mentioned about how the VIX was giving an indicator.
Since morning actually, Neeraj, the VIX was trading with gains, but let me also mention about Nifty PCR. On Friday it was about 1.33. Intraday also today it touched about 1.38. So higher PCR somewhere gets uncomfortable for the FNO traders as well, because the bulls may not be able to hold on to their positions, and that's exactly how it has panned out today. If you look at the call side of the picture, there has been aggressive writing at the 10,000 strike. Almost 10 lakh shares have been added, and obviously since the markets are down, the premium also there has fallen. 98.85 is the level that we were chatting about in the morning, that being the 20-day moving average of Nifty. So that getting breached, but once again there is buying come, from those levels of once again I think Nifty is back above the 9,900 mark. So yes, so far the picture remains the same. Every time we've seen correction in the Indian markets coming about, there has been some buying which comes at the bottom, and it has to be domestic investors, I'm presuming, once again, because in a scenario like this, I don't see the FIs putting money back as of now.
Yeah, it'll be interesting to see the FI sell number today. I'm presuming that it'll be a sell number. So
that goes without saying, because I think for the last 16 to 17 trading sessions, they've been consecutively selling in the cash segment.
Yeah, so there'll probably be a sell number today. Let's wait and watch how large the sell number is from the FI side as well. But that will more be a continuation of what they've done all through the month of August as well. We have really seen a torrid month, the second worst month after November 2016, which was the demonetization month in terms of FI flows.
Here's a bit of trivia actually globally, Neeraj. In the month of August and September, you got these traders, the hedge fund traders globally, they go on their summer break. So if you look at Dow returns globally, for the last 20 years, you'll get to see negative returns for the month of August or September. Precisely that's the reason why FI outflow was also seen in the month of August.
Yeah, maybe that, maybe also the fact that the month of August actually saw the first murmurings of this conflict coming in.
It's just a bit of trivia that historically Dow has never performed in the month of August or September.
Yeah, well, touch wood, because of domestic flows coming in, our markets continue to do well despite those outflows, but let's wait and watch. For now, this is the update that we have on the North Korea standoff, as we're calling it. The markets have recovered a little bit from the lows. Right now, currently at 19,900, I think the low was 9,871 or 9,867 or thereabouts. From there, we've come up a bit. Let's see. I think, keep in mind, the more important trigger, according to me at least, I don't know if Navneet differs, but the more important thing to watch out for is that the US markets are shut today. They will start trading only tomorrow. And if indeed the US markets have a bit of a violent reaction, presuming that something happens between now and tomorrow evening, then we will have a day in the red on Wednesday as well. So keep in mind, don't look at this recovery in a big way. I think the next 3 or 4 days are particularly important in terms of the news flow, in terms of a market reaction as well. So stay tuned to the markets for that, and we'll try and bring you as many updates as possible. Every day at 1:05 p.m. We'll be tuning in to tell you all that's happening in the Indian markets. For now, from me and Navneet and the team that put this piece together, thanks so much for tuning in to Bloomberg Quint.